Hey guys, Boris Lasser from BK Forex. Welcome to our weekly Forex technicals for 429.503. The critical question next week, I think, is going to be: will Europe give up or hold the 130 level? As always, trading foreign exchange on margin carries a high level of risk, but not be suitable for all investors. And I ask you to read this disclaimer very, very carefully to understand all the risks associated with trading foreign exchange on margin. Let's take a look at the euro dollar here and look at it very carefully here. This is a very short-term chart. Obviously, this was the break from the Goldman Sachs speculation there was going to be a rate cut. We have the ECB meeting coming up this week, so it should be interesting to see if that indeed comes true. And that's one of the key pressures that's holding the euro, of course, down towards the 30s. But we've been relatively resilient at this level. You have to look at this on longer-term charts, and you see that there's a very, very strong base. I mean, we sort of the ultimate support here is right above 29.50. We tested it here. This was the value area here at 29.50 where we tested it, came right back up and pushed higher. So from a bearish point of view, when you're looking at this, you definitely see a shelf of support. On the other hand, I think the much more dominant trend when you're looking at a longer term trade is the fact that we have a series of lower highs. And until these lower highs get broken to the upside, the dominant trend still seems to be to the downside. So on a balance of risks, when you're looking at this chart, it looks more bearish than it does dovish in the sense that it's obviously, while it's holding 130, it seems under pressure to want to break it down further. Looking at it on a more deeper level, as you can see, this was the 130 level here, for example, that we tested several times, came back, tested, and now, of course, in classic technical support, that which was former resistance becomes now from present support. So if we do break the 130 here, of course, the 29.50 is going to be the operating key support level. If we take 30, then 29.50, it becomes a much more bearish structure, and it really could unwind all the way out to at least 28.50, possibly even do a full double bottom test here to 2800. To the top side, if we manage to hold this level, there's a couple of barriers here that it obviously needs to clear. First is the obvious 30.80, then 31.25. These are sort of minor barriers, but then the real big operating barrier is going to be the 3200, which is going to be crucial for it to clear if it takes on a much stronger, deeper bullish posture. Looking at this chart right now, it looks obviously much more vulnerable to a breakdown to the 30 and then a formal collapse all the way down here. But until and unless it does so, it's a little bit indeterminate at this point. But given the way the chart is looking at right now, if you had a gun to your head, you certainly want to be more bearish than you would be bullish, given the way the construction is looking. So the euro looks very important, and if it comes down through the 30s and 29.50s, it opens up a full unwind all the way to 28.50s and 2800. If we can clear the 3100, there's a very reasonable chance, of course, we'll take 32s, but the 32 is going to be a much more serious resistance level in order to break, and it would have to have some significant momentum to the upside. Take that out as we go forward. Dollar yen, on the other hand, has been an abject failure for those hoping to see the 100 get taken out. Century mark just did not get taken out. Look at the amount of resistance we had here: 1, 2, 3, 4, 5 failures at the 100 mark. Having said this, though, once, of course, we came out of the 99 corridor, which was the sort of the key pre-run-up corridor, it gave up the 98 very quickly. Now it's in a downward distribution, but here we were coming up towards this very strong value proposition around 9600, which was a big value proposition for the bulls. So there may be a second double bottom here as the late coming bulls want to come in and open a position near this area. So therefore, the downside here is kind of bounded by the 96, but still has a lot of downside to go. The top side, again, very, very frustrating. Now, you could have a complete turn here. I mean, of course, we have the NFPs coming up on Friday. Suppose they're super, super good. Suppose they shatter all expectations, which is unlikely, but suppose they do all those things. That could really create a very, very different structure, push us right back into the 99.50 level. It could possibly really take us out. The key level is the 110 level. If we could take that out, that would really signify that yes, we can take out the hundreds, and then the next level to the upside is about 101, and that would completely change the sentiment of the market, obviously, because one of the key things that I've been talking about from a fundamental point of view that's been capping this trade is the weak U.S. data. So if we have positive U.S. data, that could be the the straw that breaks the camel's back in terms of the short trade and push the dollar yen through to the upside. If we have a negative uh, development on Friday, I think you basically have a retest of this 96 level, and let's see how strong the bulls are at this point, how much conviction they have now, given the fact that the dynamics in the pair have changed radically. The one pair that's been actually quite strong this week, and the key catalyst, of course, was the surprisingly strong UK GDP number, was pound dollar, which soared through the 54s and really did not back off its first retest of 55s in any significant way. It looks relatively constructive, and it certainly looks like it could mount a challenge through the 55s on any mild move through the risk sentiment. Let me just show you on 6-month charts. You see how this 55 level was the level from which basically everything collapsed downward. So a recovery to 55 would be a very, very strong bullish move. Having said this, though, I think once it clears 55, there is still a little bit of resistance here, and it's difficult to see that it's going to have too much momentum to the upside. I mean, certainly 55 to 57 was going to be a battle here for the bulls, but with cable far more bullish and euro far more bearish, of course, it opens up a completely interesting look here at the euro pound, which for a long time was doing a very, very strong recovery, and now looks to be again failing, and failing badly for different reasons. Before, it was failing because cable was getting the safe haven bid. Now it's failing because cable is getting the growth bid, which is surprising of all things, or at least for the near term, it's getting the growth bid. So you have this essentially triple top at 8,700, a failure, a lower failure at 8,600, and now a 3-month low at 8,400. And that's kind of dynamic. It could really persist at least towards the 83s and perhaps even towards the 82s as we have a total change of sentiment, especially if the euro turns negative. The break through the 130s, in many ways, is going to be expressed in a cleaner way through the euro pound to the downside. So that's a very interesting look as we open up the week. Lastly, the com dollars, Aussie, really not holding the 103s well. We've definitely held the 102.50s or right below it, but just cannot seem to hold the 103s. Definitely a lot of negative risk. There's a speculation, of course, RBA could cut rates. That would be a very, very interesting development. And certainly, if the RBA cuts rates this week, then that would put further downward pressure to the Aussie and really could open up a retest of this 101.50 bottom on a surprise move. If it doesn't cut rates, they could have a relief rally, but the relief rally really sees a lot of resistance here at the 104s and 103.50s, 103.50s especially. This was a very, very serious support level, now became a very, very heavy resistance level. We broke the resistance after several times here, and then we made a rally towards the 105.50s, and now we just collapsed right back through it, and it's acting, this 103, 103.50 area definitely acting as very, very strong resistance. So for Aussie to really kind of become more bullish, you need to have the 103.50 recovered to sort of restart its secondary leg higher. If we were to recover this, by the way, if you look at the chart, so you recover the 103.50s and you sort of wind up here, then it takes on a much more constructive. Oh, let me just get rid of this and just show you on the chart, because what would happen is if Aussie kind of holds the lows here, comes up to the 103.50s, let's say on a relief rally, then it looks much more constructive on the charts because you have a higher low, you have a series of higher lows, and it looks like it could move right back up towards a test of 105s. If we break down on an RBA rate hike and we start moving downward, then we have a possible retest of a double bottom, as I said, at the 101.50. So that's kind of how the week is shaping up. Lots of interesting possibilities, lots of interesting scenarios, both in the euro pound dynamic, in the Aussie, and of course in dollar yen, which looks like it's definitely fading at this point, but could stage a viciously quick short covering rally if the US data suddenly surprises the market to the upside. Wishing you guys the best of luck and the best of trading. This is Boris Schlossberg, over and out.